Hello again, this is Brian Shannon from Alpha Trends with part two of the viewer request, and this is going to be a much shorter video. I've only got, I guess, about 8 or so stocks to look at. If I knew there were that few left, I probably would have just put them all onto the one video. Anyways, first one was let's take a look at Rambus as far as a long trade over the next week or so. Now, Rambus has been a real volatile stock this year. I mean, from what is it, 17 bucks a share up to 47, back down to 10, and here it is at 16. On a daily time frame, let's blow this up a little bit. What typically happens in a downtrend is first you're gonna find resistance at the declining moving averages, and here we've got a very significant declining moving average with the 50-day moving average. Again, you want to ask yourself, where does the stock come from? Where does it have the potential to go? Well, I think the potential is for maybe for it to come up to here, where we've had this resistance already. We know there's been sellers there, so there likely are again near $18 a share. But we've also got this widely watched 50-day moving average. And where has the stock come from? Well, just looking at the last couple weeks, don't tell me okay. Just looking at the last couple weeks, here on August 22nd, the stock was 11 bucks a share. It's just ran $6 in the last 2 weeks. To me, it just seems way too far extended for a favorable risk reward. I think that you're starting to see these lower highs and breaking below this level right here. If you are long, I would get out very quick in here. This stock, the 50-day moving average is still declining at a rapid rate. Guilty till proven innocent. I would not be interested in getting long this stock. It's way too risky right here. Bid you, buy do, whatever the heck you want to call it. This stock has been very volatile as well. Gapped up here on earnings, I think, and then Google, I think, maybe dumped their position at gap down. Anyways, where is it rallied up to? Right where you would expect there to be a source of supply, where this prior level of support is now acting as resistance. Got a few people excited right over here, but it just all it did was bounce up to that declining 50-day moving average. The question was here, would you buy this one long or would you sell it short over the next week? And I would say again, if you're that uncertain, then you're better off finding a better stock that has a more established trend. And we've got a stock here that moving averages are crisscrossing. I think that the 50-day moving average is heading lower. Therefore, I would say if you have to trade this stock, there's probably less risk on the downside. Where would you get involved? I like the way it looked like it tried to break out on Friday. Okay, because from these failed moves often comes fast moves. That's kind of the way we had that Celgene set up last week. But I would say maybe below this, maybe even below the 5-day moving average or below the low from 2 days ago, last Thursday. Below this $77 level, I think there could be bigger trouble. But short term, realistically, the stock is just kind of consolidating here, doing a whole bunch of nothing. I do like, though, how it looked like it tried to break out, sucked people in. From failed moves come fast moves. So maybe it's time to look at this one and watch it set up a little bit better for a potential downside trade. Mother's Work, symbol MWRK. Here we've got a phenomenal uptrend on the weekly time frame. These are the types of stocks I like to trade. We've got an established uptrend on the daily time frame as well, and we're getting increasing volume on the way up. Now, big volume typically peaks near turning points. There's no way of saying that, hey, that's as big as the volume's going to get, or that we're, to the end of this move, because tomorrow might be even bigger volume. But the stock, again, where has it come from? In the last 4 days, it's come from 35 bucks a share. And in the last 5 days, it's come from this close here at 33. So it's come from 33 to 39 and a half. It's rallied $6.50. As far as new money going into it, I think that you're chasing yesterday's mover, and you're going to potentially be in a lot of trouble here if the sellers decide to come back in. Another thing you want to look at is the average daily volume here is only 65,000 shares a day. It's going to be very easy to get trapped in here. So Friday, the stock traded 309,000 shares, about 5 times its average daily volume. And again, it's in a great uptrend, no doubt about that. But it sure is extended, and I think there's a lot of risk. I'd rather see the stock pull back down towards 37. I'd like to see it 2 to 3, go sideways for a day, pull back 1 to 3 days, goes sideways for another day, and then buy it as it starts moving higher again. Right now, it's extended. You're late. Don't chase it. You're probably going to end up regretting a purchase in there. EZPW, EZ Corp. Let's take a look at a weekly time frame. Nice uptrend. Average daily volume in here is about 380,000 shares. And I would say that you want to probably trade this from the long side. It's not the best trader as far as volume goes, and you can see how spotty this 5-minute time frame looks. I'd say if you're going to get involved in this stock, though, maybe go above Friday's highs, put your stop down near about 39.50, and look for a move back up towards $42, $43 a share. EZPW looks pretty good. Gentex, symbol GNTX, George Nancy Thomas X-ray. We've got the 10 above the 20 above the 50-day moving average. The volume wasn't as big as I'd like to see on that rally higher, but it's holding on to these gains above the rising 20-day moving average. Let's take a look at a weekly. Where does the stock have the potential to go? Well, this prior level of support will tend to act as resistance, and the stock did do that. So I think best case you're going to get another, a test of that 15.5 level, and that's this area here, 15 and a quarter, 15.5. Let's see if we can justify a trade in there, maybe above this high with a stop below here, and your target up near about 15. Let's be conservative and say 15.15. So that looks to be at least 3 times bigger than what we would risk in here. So Gentex looks decent. So that one might be worth a shot on the long side. XXIA and that last one and this one were questioned for a time frame of about 6 days. XXIA, the stock has just rallied from $7 to $10.50 a share. It's expended a lot of energy coming up here. Looks like the 10-day moving average is about to cross through that 20-day, telling me that it looks like it's undergoing a little bit of consolidation in here. If I wanted to be bearish on the stock, I could say that it had a head and shoulders pattern it's building here. Let's take a look at a weekly time frame, and we can see again, where did it rally up to? This prior level of support acting as resistance now, and I think it's made its move. Now I would say that I would lean short on this stock, and you could, if you wanted to short it, maybe right around in here with a stop just above that $10 level, and I think the downside picks up below this low, and you could potentially see the stock down towards 940 initially. I think there's pretty, near that 50-day moving average. I don't really see much reason to trade XXIA. Whole Food Markets, WFMI. This is a potential short over the next 2 to 4 weeks. What's my thought of that? I was short, bearish, WFMI over in here as it broke down. Now it broke down hard. It's rallied up on diminishing volume, so that's good to see. And now we've got the stock kind of going sideways. So I think that it's really got to break below this recent level of support, looking at an hourly time frame, below that 52.5 type level. If you wanted to be involved in this one over the next couple months, maybe puts are the best way to do it. I think that puts are generally the better way to do it with a short side exposure. That way, when you get those sudden and sharp moves, they don't take you off guard and end up costing you a lot of points. But I think that puts would probably be the better, my preferred way of doing it. Maybe go out to the October, November 50 puts. Depends on what your strategy is, but I do like it as a short. We've got the 50-day moving average declining, so I would prefer it as a short, obviously, than a long. BTJ, same time frame, 2 to 4 months, and BTJ looks, I don't know this stock here. Let's just take a look at this average daily volume in here, 252,000 shares, but on the way up, it's been trading right here, 530, 358, 736, or 63, and just under 1 million shares. So nice increasing volume on the way up, low volume pullback. And let's look at a weekly time frame, and hopefully this stock, what I don't want to see, okay, when we look at this, it looks like, hey, great breakout, nice big volume breakout, low volume move. This looks like a perfect candidate. What I don't want to see is a whole bunch of trading at about 20 bucks a share from a year ago or so. Let's take a look and see. Not bad. I mean, that's not horrible, because it can easily get through that level. It's holding on to its gains up here. And looking at a monthly time frame, that would be all-time highs that it's closing in on. So I think that maybe it consolidates a little bit further under this level because it's been the prior area of where it found resistance a year ago. But look at the volume in here. That big volume tells me that it probably has the power to get through there. Now there must have been some kind of news in here, but this is probably the best long idea I've seen of this batch of stocks. Now, what we've got on an hour, we're looking at a half-hour time frame. Each candle represents 30 minutes. We've got these lower highs, which seem to have stopped, but we've got these higher lows as well. So, to me, the obvious way to play this stock is to the long side for sure, above this level of resistance. This level of resistance in here is right at about $18.50. Above there, I think your stop could go right here if you're aggressive. If you want to be a little bit more conservative, put it below there. I like this stock. I think it probably goes on. You could say, if it gets above these highs, where does it go? Because it's all-time highs. We take a look at the measured move from 13 up to 19. That's $6. We could take the low of the pullback, which is about $16. Let's call it. Add $6 to that. That will give us a target near 22. Now, it doesn't mean buy the stock and hold it for 22. It means that's where it potentially could go. Anyways, this looked like the best of them. Let me know what you thought about this little experiment I did here. To me, it seems like maybe it was a little bit too long. Maybe next time we limit it to one stock per person. That way I don't have to do two videos. But let me know what you think, and feedback's appreciated. Thank you.